What's up, everyone? It's Karthik with MoneyVest. So what an incredible day for the markets. Pat yourself on the back. Congratulations to everyone who bought stocks last week and deployed a lot of capital, as we are seeing significant momentum for the indices, with the NASDAQ up over 400 points on the day, up over almost 2.5%. We had the S&P 500 up 1.6%. And the Dow Jones rallying over 1% on the day. So there's a lot of greenery, a lot of stocks pushing higher, with over 4,195 advancers on the day, with just over 1,500 stocks that were declining on the day. And this right here, of course, was Magnificent 7. Google up over 1.2%, Apple up 1.7%. We have Microsoft up over 1.77%, Amazon pushing up over 2%, Meta's up over 2.4%, Netflix up over 2.3%, Advanced Micro Devices over 3% in the green. And of course, the two winners on the day, Tesla and Nvidia. Tesla up over 5%, pushing back over $207, and Nvidia $116, up over 6.5%. A lot of our members are up on everything that we picked up last week, all the stocks that we bought last week, including a lot of leveraged ETF. Of course, I had a trade on FNGU up over 9.4% today. Unfortunately, I did not participate in today's rally. Going to be honest, super honest, because I did sell my position yesterday because it's a leveraged ETF. If it was a non-leveraged counterpart, I would have gladly held on, which I did, of course. SMH and VUG, I continue to buy more shares, and I'm up significantly. And SOXL pushing up over 12% on the day. So lots of momentum coming in for the market. Was up close to just under $13,000 on the day. So again, if you want to get access to all the alerts, all the analysis, and of course our MoneyVest dashboard, which I'm going to be going over now in this video, which we have created, which I think is going to be super helpful in your understanding of the overall market structure and where we are. Link's going to be down below if you want to join. There is a 16% annual discount that's available until the end of this month, and you will be able to engage and have a conversation with thousands of traders and investors from the world. Pretty much connect with some of the most experienced traders and investors out there. So just want to go over the chronological order of things, right? So going back as far as July 25th, you'll notice that we had QQQs already marked out some very important levels. So this right here was the overall uptrend. I had marked out 3 different support levels to keep in mind. Of course, this was going to be the bear market, down almost 30%. This right here down over 17%, down to a $417 level, and a bit of a correction if you were going to be down almost 11% from their all-time highs of $450. Of course, we were keeping a track of the MoneyVest index as well. We came down to 3.41, then 3.28. Then as volatility spiked on August 5th, that was the big day when the MoneyVest index came down to as low as 2.95, as the VIX was trading upwards of 50, even as high as 65, of course, last week. This right here was the highest level since the COVID, March 2020, and at one point we were trading down to 2.85. I remember we were doing a live stream, and at that point I calculated the MoneyVest index and shared this reading where we were at 2.85. And as volatility continued to come down, so this right here, August 6th, volatility was already back down to 28, already down over 62%, down to 24. As it continues to get crushed over and over again, we continue to see the markets push higher and higher. And now as it stands, we are at a volatility reading of just under 19. So that's where we are. If you come over to the VIX, we are 18.11 actually. So we can update this number as well. So 18.11 is where we are. We're in the 52 percentile, so pretty much a median value for volatility. So these are just some of the many indicators that I'm going to be sharing with everyone. So eventually this is all going to be filled here, and there's going to be some boxes here because I've got some other things to also plug in. But for now, I've got these things to go over. The MoneyVest index is now back over 3.56. So we came down to 2.85. We're back over 3.56. So now it's in red, meaning that the risk reward is starting to once again become a bit more unfavorable as markets are going higher. So one of the things that I've really tried to enforce and help you understand, especially some of the newer investors, you'll understand that over time, is that price and risk are correlated with each other positively. As price goes up, risk goes up. As price goes down, risk goes down. And that is one of the things that we have studied and learned in many financial literature. as well as some of the best books here. So from Howard Marks, the most important thing, he talks about this very concept that price and risk move in tandem with each other. As price goes up, risk goes up. And that is what we're trying to analyze with these types of analysis, right? So we're trying to understand where the risk reward is the most favorable, because, when the markets were selling off last week, and we were obviously seeing significant amount of downside, I remember talking about even a couple videos ago, I mentioned how everyone is bearish, right? So if you read the room going into this week, everyone was bearish. There was a lot of content on YouTube. There was a lot of content on Twitter. There was a lot of charts kind of labeling this sell-off similar to 2007, 2008. And everyone going into this week was incredibly bearish. And the markets oftentimes don't do what the consensus is. They do the exact opposite, right? And we're starting off, today and again tomorrow. We'll see what happens with CPI, but we're starting off with a very, very positive gain Monday, Tuesday. Now, things can still change. I mean, we still have, 4 more trading days left for the week, and things can still change. We can still start to flip over and come back down. But the idea is that we're not trying to time the market. We're not here to pick the tops, pick the bottoms, and be precise in our timing. We are trying to understand where the risk reward is ideal to take advantage of those opportunities. And I think these indicators give us a sense of where we can be aggressive versus where we can be a little bit more cautious, right? So it's more of an indicator kind of fluctuating between aggressive versus cautious. So other things that we have on this, of course, we've got the VIX reading, and this is the percentile, so we're in the median percentile. We've also got the M1, M2 VIX contango level, which has now come down to negative 0.46%. At some point, this was at negative 0.011%, so 0.11%. That's how low it got down to. But right now we're at negative 0.46%. S5FI is going to be a reading for S&P 500 stocks trading above its 50 simple moving average, and S5TH is going to be a reading for S&P 500 stocks trading above its 200 simple moving average. The PCC is going to be the put call ratio in the S&P 500. So if this number is above 1, that means there's more put options compared to call options, and historically that has resulted in the markets coming down and thereby representing an opportunity for us to buy. And that is a PCC percentile going back as far as 2005, 2006. So a lot of this data that I'm showing you is going to be reserved for all the members, of course. I'm going to be giving them frequent updates in real time and where we are. And this is all data that we have calculated on this spreadsheet. So if you come over to VIX, I've already done the research here. I've already looked at historical values. If you come over to, let's say, S5TH, again, this is all the values from going back as far as, let's see, 2006 here. If you come over to some of the other values, so S5FI, that's going to be the S&P 500 stocks trading above their 50 simple moving average. Again, we're going back as far as 2006, 2007. Then we've got, values related to unemployment. So again, we're doing a lot of analysis going back as far as 1948. So those are the percentiles, initial claims, all that is going to already be there available for you on this dashboard that I'm going to be sharing all these values. Now, the interesting thing is that as these values change and fluctuate, these color codes will also fluctuate. So for example, if I push this PCC to, let's say, 1.75, now you'll notice that both of them turned green. If I look this VIX value at over 65, as we were on Monday morning last week, hit enter, both of them turned green. If I go up to this S5FI value, let's say that there's only 10% of S&P 500 trading above its 50 SMA, hit enter, both of them turn green. This right here, similar thing. Let's just push it down to 8%. And now we've got both of them as green. And again, of course, this is, if it's in contango, then we're looking at a nice stable market. So that is going to be the greenery as well. And of course, Money Vest Index, if it gets pushed down to, let's say, 2.25, for example, now we're in green for this as well. So this right here would be the ideal picture where you want to be very aggressive, because this right here are all the data points where you've got a very, very good risk reward ratio market, right? But right now, as it stands, this is where we are. This is the current situation, which is red and mostly yellow. So these are the color codes that we have for the MoneyVest dashboard, which again, I'm going to be adding a few more things. So we got the yield curve reading, the volatility, VXX, ETP, we got the VIX futures, the drawdown, the RSI, and a few other indicators that I have in mind that I want to really just create this dashboard so that it's color coded and very, very useful and actionable recommendations that I will present for all of you. So this is something that we are working on, work in progress, and I will be sharing more on this in real time when the markets are open. So coming back over to this, so NASDAQ closes up 2%, Dow adds 400 points as tame inflation data fuels the market comeback. So a few more things that I really want to highlight. So Goldman Sachs and Stifel essentially coming in with a few other headlines here. Recession not priced in. So some weak economic data has appeared to spark sell-offs in the stock market over the past few weeks, but that doesn't mean that a recession is priced in, according to Goldman Sachs. Strategist Guillermo Jason, a very interesting name, said in a note to clients on Tuesday evening that there are signs of a slowdown in Europe and China, in addition to the recent softening in the U.S. labor market, but that the stock market is still positioned optimistically. Cyclical stocks have underperformed during the correction, but the U.S. equity market does not appear to be pricing in a recession. And Stifel essentially says the Fed's 2% inflation goal is a pipe dream. The Federal Reserve's goal for 2% annualized inflation may be a pipe dream, according to Barry Bannister. When I look at everything, I think 2% for the Federal Reserve on an inflation goal is just a pipe dream. The market on the break-evens will eventually adjust to that and will have to add some term premiums as well as the 10-year treasuries as well. So tomorrow we've got the inflation numbers coming out at 8:30 a.m. Eastern. I will be live for that number. And this right here are all the expectations. I broke this down in a very specific, more detailed video in one of my previous videos. So make sure that you do check out that inflation video. But this right here is the federal funds interest rate expectations with regards to where inflation could be. So both of those cycles combined. And this right here is where we could end up for inflation over the next 12 months if the average month-over-month change is anywhere between negative 0.2%, in other words, deflation, to as much as positive 0.7%. So all of that is discussed in my previous video. So definitely do check that out if you are interested. So this was the number that resulted in such a strong rally for the market. So coming in at 0.1% month-over-month, better than expectations. We got one beat, 2.2% on a year-over-year basis compared to 2.6% consensus and 2.7% the prior number. So we got double beat, and X food and energy, so core PPI, month over month coming in at 0.0%, so no changes there, and 2.4% for year over year. So we got a quadruple beat for PPI numbers. So of course, that was a very, very strong print across the board. Some people are saying the data is cooked because of election. Hey, either way, the markets saw that as a big positive, and of course, we rallied harder. 54% probability that we're going to see a 50 basis point rate cut in September, and then another 25 basis points in November, and then another 25 basis points in December, for a total of 100 basis points is what the markets are pricing in currently, as inflation continues to show us good signs that it's coming down, and at the same time, unemployment starts to accelerate a little bit higher. Now, CPI expectations for tomorrow, as we've already discussed in my other video, but 0.2% is month over month. Year over year sitting at 3%. That's going to be aligned with where we were in the prior number. X food and energy, so core CPI, that's really what the Federal Reserve focuses on more. 0.2% month over month and 3.2% on a year over year basis. So these are going to be the expectations for tomorrow. And like I said, I will be live at 8:30 a.m. Eastern to cover the CPI numbers for all of you live. Take a look at the market's reaction, and of course, calculate our dashboard items and see where we are for that as well. So very, very strong momentum coming in. Technology, consumer cyclicals, healthcare, comm services, almost all sectors were green with the exception of energy. That was so slightly higher, slightly lower. In fact, everything else was green. In the last 1 week, of course, all 11 sectors are green, anywhere from 68 basis points to as much as over 6%. In the last 1 month, we've seen a little bit of a split market with technology still down. Materials, cyclicals, and comm services still selling off, with utilities, real estate, and defenses that are higher. If you come over to our MoneyVest platform, you'll notice that we have moved back within a dip for S&P 500. The Dow Jones also within 4% of its all-time highs. NASDAQ is within 8% of its all-time highs, still within the context of a pullback. And the first one to reach a dip among Magnificent 7 is Meta Platforms, $528. We are less than 3% away from its all-time highs. Incredible job from Meta in pushing higher the way it did, and now within a dip. Apple's in a pullback, and that's pretty much it. Netflix also well within 10% of its all-time highs, so back in a pullback, and so is Oracle. And Tesla is now back in a bear market. It was in a crash, down over 52%, but of course today's momentum putting us back over $207, well within 50% of its all-time highs. And Nvidia back within a correction, only down under 18% from its all-time highs, with Amazon in a correction still, Microsoft's in a correction, Alphabet is in a correction, Broadcom is in a correction, which if this rally were to continue, and if you do see that momentum higher, then a lot of these companies are going to turn back into a pullback and then eventually into a dip as well. Now, going over to some other really important catalysts. By the way, Bitcoin back over 60,000, Ether just over $2,700 as well. Now, here is the most important thing that I feel like the entire world is also going to be watching. So, as we already know, there is a huge warning from Iran that is that's already mentioned that they are going to retaliate, and there is a potential for an attack on Israel. So, US says it's preparing for a significant Iran attack on Israel. White House says the Iran could attack Israel later this week. So August 12th, I think, was the date where there was going to be a supposed attack on Israel. But Iran rejects Western plea not to launch retaliatory attack against Israel. So this is not it's not supposed to be political or anything like that, but this is again a huge catalyst which could spur some more uncertainty and some more volatility in the markets if this were to take place later this week. So Iran has rejected Western calls not to retaliate against Israel for killing the Tehran Ismail Haniyeh, the political leader of Hamas. And actually, this is one of the reasons why I haven't been able to travel. So I've been meaning to travel to Tbilisi, Georgia. But if you take a look at the airspace, and this right here is a website that tracks the airspace for different countries, right? So airspace over that country. So I'm, of course, over here. That's the UAE. This is India. But this entire area is, of course, under greater conflict. This right here is Ukraine. This is Russia, of course. Then this is Iran. You've got Iraq, Syria. Georgia, I believe, is going to be somewhere over here. It's landlocked. And then of course, you've got, oranges or red or yellow, which basically are stage 1, 2, or 3 in critical warnings for airspace. So this is the current situation of course, the Middle East, which is pretty dire, and at the same time leaves doors open for a lot of uncertainty and market volatility as well. Because, oil, one of the most important commodities, a lot of the oil production happens in this area, the Middle East. We've got Saudi Arabia, the UAE, of course, Abu Dhabi, Russia, big partners of the OPEC countries. Oil is one of the most important commodities, and if there is a lot of tension, a lot of crises environment, oil prices tend to spike during that times of environment, which then affects inflation, which then affects interest rates, and of course global markets. So there is still some level of uncertainty around these things, so we have to be on the constant watch and kind of understand what is going on. And that's one of the reasons why I haven't been able to take a vacation here, because I'm kind of still unsure if flying over Iran would be wise at this moment. So I'm kind of waiting just to see how things play out over the next few days. So coming over to the markets now, and volatility here continues to drop further from its highs of 65. It is now officially down over 72%, back down to 18. So we did get a buying window, but it wasn't long enough. It was a very, very small buying window, only an hour and a half. VIX was over 65 for a very brief period, and then of course came right back down. And the next level really is going to be down to 15 for volatility, which if you come over here, if you put down 15 here, it's going to put us down in the 33 percentile, meaning red. That means we need to be cautious. We need to be more alert. When the VIX is low, it is time to go, meaning that we have to be very careful for yet another volatility spike, resulting in the markets coming down. But right now, we're still in the 52 percentile, still in the medium range for volatility. But I think this is really, really helpful. As these indicators, as these data points turn green, that's when the risk reward is going to be very, very favorable. And that's exactly what we're tracking with this analysis. So that's where we are. Coming over to crude oil, as you can see, that we're already starting to see a bit of a spike here since last Wednesday, August 7th. We have pushed up over 9, almost 10%, over $7.20 per barrel, getting up to over $78 a barrel on this anticipated strike from Iran. But the next resistance and target is going to be $82 per barrel for crude oil, and a massive support sitting right over here inside this green rectangle, roughly around $72 to $73 per barrel for crude oil. Coming over to the market, so QQQs with a incredible jump, 2.5%. So if you come over, this was the overall analysis. We're starting to break out above this level very, very nicely. As you can see, this was a huge resistance at 17,000, which will go ahead and turn this level into a support for the NASDAQ, and the next level is going to be all the way, of course, up to 18,600. But before we get there, I think some more areas of resistance at 17.6 for the NASDAQ that we need to watch moving forward. Very, very nice recovery from the RSI. The MACD also, as you can see, starting to potentially cross over that signal line, and the L3 banker oscillator also showing some bullish momentum coming in for the market. So it was incredibly oversold after being down over 15, almost 16% from its all-time highs. So in a bit of a correction, now we're starting to move back higher. Now, one thing I want to mention is that even if this is, let's say, for example, any type of a fake bounce or a bull trap, or this doesn't carry that continuation momentum higher, and we start to see that selling pressure once again, that is good. I really want everyone to understand that markets selling off, markets coming down is good news. It's good news. It's great news. It is excellent news for prices to come down. Think of it this way, right? If you are lining up to buy your favorite product, let's say that you want to buy a gadget, you want to buy the new iPhone, or you want to buy the new Xbox, or you want to buy something that you really like, and if you find that thing at a discount, right, it's selling 40% off or 50% off, there's a huge sale. Wouldn't you be happy? You would love that. You would be happier, right? If that thing is selling at a huge discount. Same thing applies to stocks. Think of stocks as items that you can, if you want to buy, you want to buy them at a discount. You don't want to overpay. You don't want to pay the highest possible price. You want to pay the lowest possible price for the best possible stock, for the best possible company, for the best possible product. So think of it that way, and you will always get excited when markets are selling off. I tend to actually feel worse when markets are going down, believe it or not. I do not like markets going higher because that means fewer opportunities, fewer things to do, and not as many deals out there in the market. So if the markets are selling off, you can see that on the channel. I feel more excited. I feel more upbeat. I feel more engaged that there are going to be deals in the markets. We can take advantage. We can trade. We can buy. We can actually deploy capital. But when markets are going up, then we can just sit back and we tend to just, watch from afar and observe how great these rallies are. Like days like today. Like there's not much to do. You already, deployed capital last week. You already bought, and now you can just sit back and enjoy those gains. So it's really just, putting in the work and then letting the money work for you, letting your money work for you and do the hard work for you. And you just sit back and absolutely do nothing, right? So that's the whole idea. And that's a very, very quick message that I want to share is if you got to flip that psychology when markets are coming down, that's a great opportunity. When markets are going up, just got to sit back and enjoy those gains. So next resistance for the NASDAQ, 17,600, as I mentioned earlier. And S&P 500 also with a very nice breakout above 5,400. So this right here is something that we identified in our previous videos. And the next level to keep in mind now is going to be 55.66. However, RSI MACD again looking very solid, coming off of their oversold levels as we have seen in the past. So there is possibility for that continuation. But again, tomorrow's inflation numbers are going to be huge. And that's really what's going to dictate whether we see more upside or not. Coming over to Apple. And Apple here also breaking out above $220. So we'll go ahead and turn this level back into a support. Again, you can see the RSI, the MACD, L3 banker oscillator, everything pushing higher very nicely. And one more thing I want to mention is that last week, if there's anyone who got scared of buying into the market or who got, panicked or was in a lot of fear, I think it's really important for you to also understand that this is a game that institutional investors like to play. This is a psychological game. They engineer these sell-offs so they can milk more returns. Think about it. If you've milked the entire cow, right? You've milked Apple, you've milked Amazon, Microsoft, Google, Tesla, all these stocks have been milked for return. There's no more upside. So they need to create upside. So in order to create that upside, they need for prices to come down first so that there's the upside again, so that they can, of course, buy at cheaper prices and then profit again. So that's, sometimes these sell-offs are engineered by Wall Street, by institutions to take advantage of short-term panic and fear, especially from retail investors. And as we know, on the week of, last week, Monday, Tuesday, retail were net sellers of over $1 billion worth of stock, and institutions were net buyers of over $14 billion of stock. So why were they buying 14 times more than retail was selling? Because they understand this game. They play with those emotions. They play with that short-term volatility, and they want to take advantage. So don't take the bait. Don't give in on that fear or that panic or that selling pressure. Relax, be calm, be composed. Join our Discord if you want to. We've got amazing people, lots of traders, investors from the world, very experienced, and we're here to support you. We're here to help you understand how market functions. There's been a lot of new investors that have joined our community over the last couple of weeks, and they're absolutely loving it. And every day we get amazing reviews from everyone. So we're here to help you. If you have any questions, even if you're not part of our Discord, comment down below in this video if you have any questions. And our members, and including myself, are here to help you and support you. So anyway, coming back over to Apple, up over 1.7%. So RSI MACD starting to move up a little bit, and we've got the next target coming up as around 225 for Apple moving forward here. Talking about Amazon, and Amazon coming up to its resistance at 173. So this right here is going to be that level to watch. Of course, we got a huge gap down for Amazon. Support level is going to stay at roughly at 166 for the company, all the way up to as much as 189, close to $190 for Amazon as well. Coming over to Tesla with a very, very nice move to the upside, finally seeing a bit of a breakout above this area of consolidation that we were witnessing for Tesla. So a lot of consolidation sideways in that range, and then finally breaking out, but now it's coming up to another resistance at $208 a share, something that we have discussed in our previous video. So this right here, very, very important level of resistance for Tesla to watch, with a support sitting roughly at $203 a share for Tesla. Talking about NVIDIA now. So NVIDIA with a very, very nice move to the upside, huge breakout above this resistance and this lower high, starting to actually make some higher highs and higher lows. My cash secured put is up over 66%, and the shares, of course, are up over 26% from their lows Monday morning that I actually picked up, which was around, let's see, Monday was around $98 a share. It is now up over 17.5%. So CSPs are up 66%. Shares are up 18%. So again, good job from the community here, taking advantage of when the markets were selling off and buying when the time was exactly favorable from a risk-reward standpoint. So next target for NVIDIA, closer to $218 per share for this company. Talking a little bit about Meta platforms here. Meta also pushing higher very nicely, up over 2.4%, very close to its all-time highs. Next resistance and target's going to stay put at $540, $541, and a lot of consolidation sideways at the moment. Support levels back down to $458 for Meta. Google, Microsoft, I also picked up last week, about 10-20 shares here each for these two companies, and we're starting to see a little bit of a bounce. Again, very oversold, as you can see, the RSI, MACD, L3 banker, oscillator, everything starts to make a lot of sense. Still kind of struggling at this resistance for now, Google is, and the next target is going to be all the way up to 174, 175 for Google. Coming over to Microsoft, and Microsoft also with a very nice momentum higher, 1.77%. RSI, MACD, L3 banker, oscillator, everything starts to make a lot of sense. Very oversold here, so it does deserve a bit of a technical rebound at the moment, and that next resistance is going to be at 431 for Microsoft as well. Coming over to PayPal, and PayPal here also moving up over 2.6%. It's coming up to that triple top, quadruple top resistance again at $68, $69. So this right here inside this red rectangle is going to be that level to watch. We've gone rejected here once, twice, 3 times, 4 times, many times. And that's going to be a level to keep in mind. And of course, Visa, lower highs and lower lows. Next resistance and targets back up to 266. Support level at $251 for Visa as well. So we got a lower high and a lower low formation for Visa. So that's going to be that support resistance back up to 266, like I said earlier. Advanced Micro Devices now. AMD also with a nice recovery. RSI, MACD, lots of buyers stepping in from the L3 banker oscillator now. And resistance going to be all the way up to as much as $145 for AMD, with the support level sitting put at roughly $130 for Advanced Micro Devices as well. So this is actually quite interesting. As we become oversold, we're seeing a lot of banker, like institutional investors or whales per se, starting to buy into this stock at the moment, as we are seeing momentum back up for this company. And finally, we got Enphase and Costco. And Enphase here also $112. Lots of momentum coming in for this stock, up over 3%. We got a double triple top for Enphase in the 138, 141 level. So this right here is going to be that resistance to keep in mind, with the very strong supports in roughly at $97, $98 for Enphase as well. So a lot of consolidation sideways in that range for Enphase. And then finally, we come over to Costco. And Costco here continues to move higher. Costco has actually done really well. It is still only down less than, I think, 2-3% from its all-time highs, less than 3% away from its all-time high. So it's done an incredible job in keeping up with those gains here. Very nice rally from 793 up a little bit over 8.9, almost 9%. Support level 839. Resistance all the way back up to all-time highs, although there might be some additional resistance here for Costco at 872 moving forward. So hope you all enjoyed this video and a complete update on the markets. Let me know your thoughts down in the comment section below. Again, join our Discord and our Patreon if you want to. 16% annual discount that's available until the end of this month. We'd love to have you on board. Again, if you have any questions, feel free to reach out. Tomorrow, big day. We got CPI inflation numbers. I'll be live at 8:30 a.m. Eastern. So tune in at that time to join us and take a look at the market's reaction on inflation. As always, happy investing. I'll see you all in the next video.